Hello, everyone, and welcome to our September Protecting Your Profits webinar series. Sorry we're releasing this just a little bit late this month. We had to push it back because of a scheduling delay. And just reminding everyone, I am not Zach Myers. We are still in the process of replacing him in our risk management education position. So in the meantime, I've invited Jacob Thompson from Land O'Lakes to join us today and help me download the numbers. Jake is definitely more well-versed in the markets than I am, so I think he's a great resource for us as we look at what happened in the last month. Jake, you want to give a little bit background about yourself?
Yeah, hey, welcome everybody. Jacob Thompson with Land O'Lakes. I'm a dairy business advisor serving Land O'Lakes membership here on the East Coast, along with my coworker, Andy McCarty. I also cover California, provide information and insights to them as well. Some of our responsibilities include working with dairy producers to implement a risk management strategy and plan and help them walk through a cost of production analysis to identify break even so they can make good decisions utilizing the risk management tools that are available.
So today, Jake and I are going to talk a little bit about current markets, what supply factors are doing, our export numbers, and then we're going to end with looking at dairy margin coverage and dairy revenue protection programs. So let's go ahead and get started. First of all, the August milk production report was released a couple of weeks ago. U.S. milk production was down 0.2% from a year ago to 18.975 million. Jake, can you tell us what we're seeing in milk production and how that's shaping the market?
Yeah, so what we got here is, obviously you can see that we were down a negative 0.2%. I think this was a little bit surprising to some people. There was definitely some individuals out there that were watching this and were expecting maybe a larger decrease year over year, but we did come in at a negative 0.2%. And I think one of the big things is the herd size was kind of flat. As you can see with cow numbers, we were at a negative 0.2%, but that came in as a bit of surprise as we look at the number of culling activity that was happening out there across the country. Dairy cow slaughter still is trending very high for the year, which is a really positive thing. And obviously with good, strong beef prices and, earlier this summer with some pretty weak milk prices, we've seen that trend continue with dairy cow slaughter obviously staying strong. And as you can see, it was a positive 12.8% from July. So good numbers there. And we'll watch these cow numbers. I think that's going to be an indicator to see as we move forward. Are we going to see this thing start to turn around and move positive? I'd be a little bit surprised if that happened. So we're going to have to watch this milk production thing as we progress into cooler weather with typically better milk production and stronger components.
So looking specifically at Pennsylvania, we were up 0.5%. That was actually the first year-over-year increase in a few months. We were flat in cow numbers, but we were down 2,000 head or 0.5% from a year ago. But we've been holding steady over the past 8 months. When you look at cow numbers nationwide, though, it does seem like there's a shift in cow numbers. Jake, can you talk to what we're seeing in the Southwest right now?
We definitely seen in the Southwest some continual contraction with cow numbers and just milk production. I believe that for the month of August, the Southwest was down a negative 3.9%. The Northeast was actually up 2.4%, and the Upper Midwest was up 1.7%. So even though we've been seeing some of that increased culling activity and decline in milk production in the Southwest, it's basically being made up in other parts of the country. I would assume that a lot of it has to do with finances and cost of production, as those guys have identified that higher feed costs and lower milk price just drives a higher culling activity with really strong beef prices that we have, across the country. So those beef prices are really, a positive thing for dairy producers as they're managing through these times that we're dealing with.
So let's look at dairy product stocks, Jacob. Butter was up 4%, cheese was down 1%, and non-fat dry milk was down 6.2% year over year. So let's talk about what we're seeing in stocks right now.
Well, you know, we see a 4% year over year growth on butter. I think that, you know, as we move forward with excess milk that we had earlier in the year that was being pushed into production, and, you know, product stocks, you know, we have good demand in the United States, and that has been very, very beneficial, and it's honestly very surprising. The American consumer has been very resilient in their needs and desires to purchase butter for their refrigerators. Cheese, you can see that we had product stocks of about 1.489 million, and you know that was down 1% year over year. And our non-fat dried milk, you know, we were down 6.2% year over year, and negative 17.3% from June.
So obviously stocks and dairy product production influences dairy product prices. In August, prices were butter prices averaged 2.67. That was down from 304 a year ago. Block cheese averaged $1.95 versus $1.92 a year ago. And non-fat dry milk was $1.10 versus $1.54 a year ago. So, hey, can you talk about what is going on with product prices both in August and what we've seen so far in September, and how it's comparing to the world market?
Yeah, as we look at that CME butter, you know, one of the interesting things that happened just last week was the CME spot butter market, or the spot trade market, actually hit an all-time record high, settling on September 28th at $3.33.5. Quite an amazing feat. Just it's so great to see the strength and the demand for, you know, U.S. produced butter in this country. And so that shows some really good strength. Now, we are really uncompetitive on the world market. As you can see, you know, GDT, you know, from August was about $2.14. That hasn't moved a lot, but as you look at that spread, we have a really hard time exporting into the world and competing with our higher local prices. CME block cheese, you know, you can see $1.95 versus $1.92. GDT at $1.87, EU at $1.53. Really, you know, as we look at it today, last week as we closed out the week, we did have block cheese on the spot market, which is a trend line indicator of, you know, potentially prices that are going to be forthcoming, but it is just a clearinghouse. But block cheese settled at $1.72. That was up 1 penny on the day. More concerning for me, I think, is that our barrel cheese settled out at $1.48, and you know, we'll have to kind of watch where that's going. That barrel block cheese is, you know, those type of prices are really going to hurt the upper Midwest with their actual milk price, because they're heavily invested in the class 3 and the cheese market. Non-fat dry milk, you know, in August, $1.10. Recently, we have had a little bit of upside, and strength. We are currently sitting at about $1.18. And so that is really good to continue to see a little bit of price advance there with the powder side of things, because every time you make a pound of butter, you got a couple pounds of powder left on the side. And, you know, this world market is where most of that powder ends up. And it's good to see some of that price appreciation that we saw last week.
Let's talk about total dairy product disappearance, which obviously influences product stocks. Butter was up 0.7%. Total cheese was up 1.6%, and non-fat dry milk and skim milk was up 1.1%. But when you break it down between exports and domestic use, kind of shifts a little bit. So you want to talk through where we are with that the disappearance numbers?
dairy product disappearances you see here for June, one of the big things is that we've had some pretty good, strong internal domestic usage. We do have exports staying there for butter that was up 5%, but the bigger concern was, earlier this summer when we had some pretty weak exports or pretty weak demand and some very low prices on cheese. We've had a nice bounce back there, but we do sit, with total cheese at 1.12 billion pounds, 1.6% up year over year. Domestic usage, 2.2% positive. I do, like I said earlier, really appreciate the American consumer, continuing to buy butter and cheese for their actual usage at home, as well as their consumption outside of the house as well. Non-fat dry milk and skim milk powder. Exports, were down 8.1%. Domestic usage, which is a smaller percentage of, all the non-fat dry milk, skim milk powder in the United States. As you can see, exports account for 67 of the disappearance. But, there has been a weakening in the China demand for non-fat dry milk, or I should say whole milk powder is their number one. But we are waiting for China to step back in and provide some strength on that international market to help some of these prices move back up and move some of that product off our shores.
So let's talk a little bit about exports year to date. Obviously, exports mean a lot for our dairy markets. We shipped 1.322 billion metric tons of milk solids overseas so far this year, but that's actually down 6% from a year ago. And export values, just because of lower milk prices, are down 657 million to 4.981 billion. All of the major commodities are down as far as exports year to date. However, some are down more than others. Jake, you want to talk through what we're seeing in the export market right now?
Well, I think on the export market, we got to realize that with high interest rates and weak economies across the entire world in many situations and locations has put a little bit of damper on the export opportunities that we've had. With cheaper cheese prices that we had back in June and July, I think that did stimulate some demand. But overall, we also have had a very strong U.S. dollar, which makes purchasing our products a little bit more expensive for the home currencies. And I think that, even though we are seeing some negatives, the world is a breadbasket of opportunity for us and the dairy products that we produce here in the United States.
So just to recap, cheese was down 6%, while whole milk powder was down 35% and butterfat shipments were down 45%. So those are pretty dramatic changes. And like you said, a lot of that has to do with the China market and them not taking whole milk powders right now. And that's really influencing our overall market and our export opportunities. So let's look at class 3 and class 4 futures versus 5 years ago. The class 3 price is actually averaging for the next 12 months $17.98. That's up 6 cents from 5 years ago over the 5-year average. And then the class 4 average for the next 12 months is $19.64 hundredweight, which is up $2.44 from the 5-year average. So Jake, what are you seeing in our class 3 and class 4 futures when we look ahead?
Well, I think in the short term, what is a little bit concerning for me is the drop off in the class 3 market. As we see October going from September, which is basically as closed at 1840, October drops down to about 1684, 1685. But the positive is that class 4 price is sitting at $20.80. And that big gap there with class 4 showing good strength is going to be a positive for the Northeast and the Pennsylvania dairy producers, which should translate to some very good, strong producer price differentials on their milk checks for the next couple of months. Not so much for the month of September because the gap is pretty close, 1884 on class 4 versus 1840 class 3. But as we move forward, October, November, December, we see a pretty wide gap there between Class 3 and Class 4. And so it's really nice to have that available for the Northeast because of the blend that we have. Class 4 plays a very important role in your cash milk checks. And these producer price differentials are going to definitely be welcome to the dairy producers of this region. As we move forward, we do see Class 4 decline, from a high of October, drops about $1.50 a hundredweight or so from October to January. Still seeing some strength there between 4 and Class 3, about $1.30 or so, with Class 4 at about $19.25 and $17.92. What I would say is that the markets are kind of flat once you get into January. As you can see, there's not a lot of variation with Class 4 prices at $19.25, $19.30 in February, $19.40 in March, $19.40 in April. Class 3, a little bit lower, $17.92, $18.09, $18.19, and $18.26. But if you're looking at this graph, those lines are kind of flat. And sometimes when you get a really nice flat line, the market really doesn't know exactly what's going to happen yet. And so there is potentially, obviously, we have more volatility in these Class 3 and Class 4 markets the closer we get. And we can see that here in the fourth quarter of 2023. So as we progress through the fourth quarter, I would expect that we're going to see some movements, in the first half of 2024. But I'm liking what I see. I think that if we can hold $19+ on Class 4 and $18+ on Class 3, we're going to have a reasonable blend price for the American dairy farmers, especially here in Pennsylvania. And hopefully we continue to see continued declines in the feed costs to make those finances look even better.
So let's look ahead to dairy margin coverage. Because we're having this call a little bit late, we can actually talk to what's going on this month as well as last month. August margin was just announced last Friday. It was announced at $6.46 per hundredweight. That's up $2.94 from July, and it's the highest since January 2023. That results in a $3.04 per hundredweight indemnity, or about just under 2,500 per million pounds. July's margin, though, was the lowest on record since the program was created in 2019. It was $3.52 per hundredweight, down 13 cents from June, and $6.43 below a year ago. That resulted in $5.98 per hundredweight in indemnity, or just under $4,700 per million pounds. So, Jake, do you have anything to add about the DMC program, or even what we're seeing going forward for the rest of the year in the program?
Yeah, once again, some really positive numbers coming back to the dairy producers with this program. I think that all of us would agree it is the best return on investment risk management program a dairy producer, can have in his portfolio. Just absolutely great program. I would imagine that, we'll see the actual, all milk price increase a little bit as we move through the rest of this year. Not dramatically, but we're going to see a little bit of appreciation there. And we should see that actual, feed costs probably come down a little bit as we see some prices weaken on the corn side. Soybean meal is getting a little bit cheaper, but it's still pretty expensive. And I would imagine that those August hay numbers are going to be in line or maybe even a little bit lower as we move forward. But great program. I hope everybody participates. It's just a fantastic product to have available to you when times are tough like they have been this year.
So what we'll close with is just a little bit about the Dairy Revenue Protection Program. First, before we go into dairy revenue protection, I did want to speak to the DMC program. So that program actually expires December 31st with this current farm bill. Negotiations are happening right now for the next farm bill, which would be for 2024 and forward. So this program expires the end of December, and enrollment for the coming year won't start until either this farm bill is extended or the new farm bill is put in place. So payments are expected through November. There's no payment projected right now for December. However, next year, nothing will happen with this program until either the extension comes or a new farm bill comes. So let's look at Dairy Revenue Protection Program. Jake, obviously you know a lot more about this program than I do. You want to talk through what we're seeing as far as Class 3 and Class 4 pricing options right now?
Yeah, on the Class 3 side, you can see that you can protect for the first quarter of 2024 at the 95% coverage level a value of $17.19. And that would cost approximately 24 cents per hundredweight. The second quarter, you're sitting at a covered price of $17.39 with a cost of 36 cents. The third quarter, $17.56 for 38. Fourth quarter, $17.55 at 47. And the first quarter of 2025, seems a long ways away, but you still have the opportunity to take protection with a covered value of $17.50 at a premium cost of 54 cents. I will say that as we look at this, one of the things that I do track on Class 3 and Class 4 is what the current value is versus the high value since the quarter was available. And right now, there was some opportunities for the first quarter of 2024. I mean, the highest value, actually, we're 94 cents off the current high price. So that opportunity was available to purchase at some point in time a higher protected value. The second quarter of 2024, well, we're off 51 cents from the high covered price. The third quarter, we're off 18. And the fourth quarter, we're off 10. And honestly, the first quarter of 2025, it's only been available for a couple of weeks. And we're currently sitting at the highest price for that quarter's offering. So some reasonable values there, even though we are off the highs for all those quarters. It is always something to look at. It is disaster insurance. If we move on and look at the Class 4 side, some very interesting information there as we see that the covered prices are a bit higher. You can see the first quarter you have $18.29 as a covered price with a 29 cent per hundredweight fee. The second quarter you can cover $18.43 at 46. The third quarter you're at $18.55 with 52 cents. Fourth quarter is at $18.27 with 50. And the first quarter has not been released. There's not enough trading activity in the market to actually provide an actual product price coverage for that quarter. But as we look at Class 4 prices and coverage levels, the current Class 4 price just recently, not too long ago, hit its all-time high. And so the current price at $18.29 is only 18 cents off the highest covered value that you could have collected or purchased for coverage of that quarter. The second quarter is only 17 cents off from the high. And the third quarter is 11 cents. And the fourth quarter currently is sitting at its all-time high. So there's some really good values on that Class 4 side. And I do recommend, for producers that are, considering DRP, here in the Federal Order 1 in Pennsylvania, make sure that you got coverage on 3 and Class 4. Even though your milk check is more heavily weighted by Class 4 influence, the easy thing may be just to do 50% on Class 3, 50% on Class 4. But right now, Class 4 definitely looks like to be a better opportunity. So some great opportunities there for producers to consider.
So, Jake, I know that you can purchase dairy revenue protection through Land O'Lakes if you're a Land O'Lakes member. Can you purchase it outside other non-Land O'Lakes members, or it's only Land O'Lakes members, right?
Well, we do have a team of individuals across the country, and we do have, I work exclusively with Land O'Lakes members, but we do have team members on our staff that can work with non-members if they're interested. There's a lot of great options out there. We'd be happy to help and point you in the right direction, but there's a lot of great individuals that are providing this product as well that can serve you. But we can definitely help and point you in the right direction or put some people in contact with you if you're a non-Land O'Lakes producer. But we can definitely help you get started.
Yeah, and the center can help you find a local agent too. If anyone is interested in looking into this program, it does provide a nice floor for your milk price. That way, if like we saw in the summer, it falls below that for you have another layer of protection beyond the DMC program. So thank you so much, Jake, for joining me this morning and for sharing your insight on dairy markets. I know you add a lot more to this conversation than I do, so I really appreciate you joining. For those who've joined us, I also want to thank you for listening today and let you know that the next PYP webinar will come out the last week of this month in October. We will also be publishing our markets and management columns, our weekly, and have a wealth of information on our markets and management section on our website. Have a great month. And again, thanks so much for joining me today.